what's your perspective on what you think that the US is doing better than Europe, or what the US could teach Europe, and vice versa? What do you think that Europe could teach the US? What are some of the strategies that you've deployed into your portfolio companies in relation to ESG that maybe you're the most proud of, or have had the biggest success factors to it? Welcome back to the Private Equity Podcast with Raw Selection. Joining us today is Gwen Colin, ESG Director of Vauban Infrastructure. Bit of a different one today because it's ESG focused around infrastructure. We want to learn all about the differences of governance between the US and Europe and what each can learn from each other. There's tons to unpack in here and tons to go through. Before we jump in, I just wanted to thank all of you for listening in. This week, which is in mid-January, this is recorded. It'll be going out in April or March. But we've hit 200,000 downloads on the podcast. Now, for a person that thought we'd only hit 10,000, or to be fair, I was happy if we got 100 per episode, which we've absolutely smashed. I just wanted to thank you all for tuning in and listening. And we've had some great guests on the podcast. We've had some phenomenal people share their insights, and that must be coincided on the basis that you're all here listening in and checking out what these guests have got to share. So just wanted to say thank you before we jump into the podcast with Gwen for just listening in and being a part of the podcast. So thank you very much for that. And let's get stuck in to this week's Private Equity Podcast. So Gwen, if you could give us a 60 to 90 second breakdown of you, please.
Sure. So my name is Gwen Colin. I'm the ESG Director and partner at Vauban Infrastructure Partner, an asset manager specialized in infrastructure. We have around 9 billion euro under management. And maybe a bit of my background. I was a legal advisor, let's say a long time ago. And I've been working in asset management for 16 years. And what point of my career was heading a range of product Shire compliant product for a large French asset manager. And I've done the break. I've moved to Asia. I lived 13 years in Asia. And moved back to Paris 2 years ago. So it's very interesting to see how things have been evolving during those past 16 years.
Wow. Okay. Asia, from France to Asia, and then back to Paris again. What mistake do you see private equity firms or portfolio companies making, and what actions would you suggest to correct them?
If you are speaking in the angle of ESG, which is, I would say, the vision I got, it's quite limited vision, to be honest. The work in asset management in private equity is much broader than ESG, which is my own vision of the business. Is trying to integrate some solutions without having a long-term view of the results, and it's really linked to the fact that the investment horizon of some asset manager are short term, and it's very hard then to apply those concepts in a very effective way. So, and I would say maybe the most important part of it is thinking about being the best at the reporting process, and not always looking at what is pragmatic and something that you can really apply on the ground with your assets. That's maybe the major issue. And once again, the time vision is always very tricky, because that's where things are happening.
Okay. So you mentioned your specialism, obviously within Vauban, is ESG. So one thing I did notice is that you guys obviously have an international approach to ESG, an international approach to your investing. What's the difference from a governance perspective between investing in Europe, as you have multiple, and also and also investing in the US?
Once again, as an ESG director, so we are investing in Europe and in the US. Those are the two, mainly in Europe, but we also have an office in New York, and we have recently invested in a heating network in Detroit. So we are exposed to the US and of course looking to North America in general. And it's of course different. We have a different culture of business, and it's a different way of looking at the business of the industry. I would say in terms of governance for ESG, once again, it's a question of approach, I would say, of the terms of ESG. In Europe, we are very focused on data reporting, and I would say we tend to believe that in the US is less much important. When on the ground, let's say I will not use the terms ESG when I discuss with an industrial or head of business, but in a pragmatic way, we are discussing about the tax facilities. We're discussing about the adaptation of the business, of the regulation, and of the environment of the business. And in a pragmatic way, I would say we find solution sometime in a bigger scale than in Europe. So it's a different way of seeing the business and different way of implementing solution. That I mean, there is good and things to learn from both sides of the Atlantic, I would say.
What's your perspective on what you think that the US is doing better than Europe, or what the US could teach Europe, and vice versa? What do you think that Europe could teach the US, or what are the main learning points from each point?
I would say, I mean, depending on what we're looking at, I was mentioning the environmental issues, I would say, on the climate side of it, but it's not only on climate, where I believe there is a different way of approaching the terms, a different way of approaching the solutions. I would say Americans maybe more pragmatic and a bit less on the constraint of the reporting that we are. But on the other terms, like the social indicators are much different in US than they are in Europe. Then depends which country of Europe, of course, but have been quite impressed by the level of implication of our assets in the local foundation, in the local citizen association, how they were taking in consideration the question of parity, the question of course, integration. That was things I think that we can learn from the US. And once again, I'm not saying it's all good and all have to be learned from the US, and Europe has nothing to bring on the table, but it's maybe a way of saying that we should listen to each other a bit more and learn from each other.
Absolutely agree with that. Talk about differentiation. How does ESG differ from in investing in the infrastructure space versus an ESG investments in manufacturing consumer? Is it pretty much all the same, or is there some clear nuances and differences?
I would say it's in the nature of the sector. If you are investing in infrastructure, and specifically when investing on the very long term, like Vauban is doing, where we have a horizon investment of 20-25 years, and we are majority shareholder for most of our assets. So our vision is very linked to the asset we are investing in. If you go for infrastructure, which is touching the day-to-day of the citizen, we tend to say infrastructure which are essential for the community, but if it doesn't have to be the most I would say climate friendly infrastructure for some of them, but I mean the only, I would say, pre-requirement that we'll have, it's that they're still useful and they are making sense in the day-to-day of our users. So it can be highways, it can be heating network, I was mentioning, then optic fibers, tramways. The portfolio is pretty vast. We have social infrastructure, what you call it's PPPs with hospital, schools, courtrooms. So it's basically, I would say, different with the other type of sectors, is that infrastructure is everywhere around you, and it's not really named. That's something that we also tend to work on, is how to recognize infrastructure as a sector that is in the center of the city of tomorrow, as a recognition, I would say, in the day-to-day of the citizens, because we have a large part to play to bring our environment to the next stage for the coming years, coming decades. And it's how we play this role as an infrastructure investor, but also as an infrastructure sector, to be recognized as an actor in this journey. It's really the concept itself of infrastructure which is evolving. It's not anymore a way of doing things. It's how we bring that sector as an active player, I would say.
Sorry to interrupt, just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast. Okay, and you mentioned your strategy around 20 to 25 years. Now, that, in my experience, is particularly long. There is lots of long-hold businesses and platforms, private equity firms, should I say, out there, but that is quite long. Why, speaking for Vauban here, but why have you adopted that process? Why such a long hold?
Because we are boring people. Don't get that. No, it's because it's our strategy is a core investment strategy, buy and hold strategy. The idea is by investing in our fund, and we are targeting mostly a large institutional sovereign fund insurer that are looking to be able to place a large amount in very long-term investment with kind of steady return and level of risk, which is related also to this return, but on a very long horizon. So they don't really have to care much about this money for a very long time. Doesn't mean that they can't get out before 20-25 years. There is a second-hand market which is very active, but it's convenient, I will say, for those large investors to be able to stay for so long in our funds.
Okay, and does that bring any level of complexity with those kind of long holds, both with the infrastructure projects that are being built, but also, from a private equity perspective, or is it just literally,
it's a
double the time, it's 4 times?
No, the only question mark you may have, and that's question we have when we are looking to new investors that are not used to the infrastructure sector and the core, specifically core investments on the long term, is am I able to get out before? So am I able to get out of your fund within 8-10 years or even less? And the answer is yes, as long as there is a second market which is very active. And we did the exercise because we were saying yes, but we didn't have the history before, so we did the exercise in past years, and it was very attractive and very interesting for some of our investors who wanted from our first fund to the new fund that we were opening, the closed-ended fund, and they wanted to reallocate to the new fund. So they did the exercise. So it's not an issue. I would say it's, once again, in my vision as an ESG director, it's only beneficial because you also, and I'm pretty sure I'm sharing this view with my other colleagues, it gives you a long-term view. So in terms of management, asset management, once you are in the board, it gives you the time also to put together the actions and to see the result of those actions. So the value that you are creating for the next 10 years are the value that you bring in your own portfolio, not in someone else's portfolio. So it's very interesting as an asset manager. I would say it's not a short-term win. It's and of course we tend to have here performance who are positive and brings dividend to our investors, but we're here for the long run, and it's also very good in terms of attractivity for a project, because a lot of our large industrial are looking for long-term partners. So they don't want us just to make a coup, but to be there with them on the day-to-day for the next 10, 20, 25 years.
Does that bring a level of difficulty from an ESG perspective, or does it make things, I suppose it will bring both, but if we think about, like, if someone's got a 5-year time horizon for an investment, you can kind of plan from an ESG perspective and see what's going to happen. If you've got a 25-year time horizon, ESG may have changed, governance may have changed, things may have happened. So do you look more on a 5-year cycle, 3-year cycle, or do you really have a true kind of 25-year vision for ESG implementation into these platforms?
Yeah, we have short-term, mid-term, long-term views for sure. And maybe the only, I mean, one of the main differences when we're saying that we are going to be, I don't know, net zero by 2050. We're supposed to be almost there at that time. So it's not like just saying that if we do things, I mean, if we say things, we mean it, because we'll be there to give the end result. Yearly basis, we do have yearly reporting and presentation to our investors. So if nothing happens for 1-2 years, they will wonder what's happening. I mean, what's the issue there? So we have to explain when some of our assets are taking a bit more time, and how we follow up those solutions. They have some examples on decarbonization roadmap, which are taking time. You have some low-hanging fruit, but for the really core, I mean, the really important move to be done, it's taking time. So you have just to show that you are putting together the capacity and the initiative and the actions which are in line with your plan. So, but yeah, I think what is interesting here is that we took the decision to be as much transparent as possible, and to make sure that everything we're saying, so sometimes we will say a bit more cautious than our competitors, but everything we are saying and can be shown, and to prove it, we have been beyond what is asked by the regulation. For example, for our SFDR report, being an European player, we do report on year base to the regulator, and we are Article 8 SFDR, but we do audit of our extra financial data and processes by one of the big four, which is the same CAC then for financial data, by the way, so they can reconciliate. But that's something that it's not compulsory. It's something we choose to do because we wanted to show to our investors that we are very transparent and very comfortable with the data we are providing. So that's maybe something that has been very well received. And another thing is that once we have done those reports and consolidated and did the audit of all those data, we send back the data on some kind of ESG report to each of our assets, so they can use those data for their own asset management and for their own communication, internal, external communication. So they see the value of the exercise. It's not just collecting data. And but we need to give them back. And from that, we discuss about initiatives that have been taking place, the target for the next year, and we do report at the end of the year all those initiatives, all those targets in an ESG fund report that we send to our investors. And not long ago, a few days ago, because sent that in December, one of my co-CEO was saying that it was one of our LPs were telling them was something that they did really appreciate it, because that's a vision in the day-to-day of the asset, an angle that didn't have before, and it's a plus. So it's a plus for my investment team, who sometimes discover things that they were not aware of. And it's a plus for our investors that see that we have a real management of those indicators beyond the collection of data.
So Raw Selection is built on completing the difficult searches, the searches that the big strat firms have struggled with, and we've built our track record and our basis on working with lower and middle market private equity firms across Europe and North America on the searches for the firm and for the portfolio companies that other firms have been incapable of completing. So if you're exploring a new opportunity, either within a private equity firm or a portfolio C-suite executive in a peer-backed setting, please do reach out to us at Raw Selection. We'd love to support you in securing your next role within the private equity industry. Alongside the podcast, we're passionate about giving back to the industry and giving people information that they can run and utilize. One thing we do regularly every year is we run salary reports on accurate and live data of people that we've interviewed and people that have shared their information with us. So if you're looking to compare your current compensation or your compensation for your next hire in your private equity firm or portfolio company, then please check out our YouTube channel and see the playlist of salary surveys. So you mentioned this, the data there, which is commonly discussed on the podcast, an important element. What are some of the actual strategies that you've implemented that you've then looked and obviously produced the data to then share with your portfolios and for them to then distribute, as you mentioned? But what are some of the strategies that you've deployed into your portfolio companies in relation to ESG that maybe you're the most proud of or have had the biggest success factors to it?
Yeah, I mean it's quite common to speak about climate because it's maybe one of the key pillar and most impactful one. So decarbonization, of course, putting together some decarbonization plan on some of our assets and engaging them to go beyond, once again, what is asked from the regulator and use it as a market force, I would say, to differentiate themselves from the market is something that we do a lot. I mean, all of our assets are engaged to put together a carbon footprint. We do review the carbon footprint anyway and the alignment to Paris Agreement. So on the climate strategy itself, we have had a lot of, I would say, strategic positioning. And when we arrive at the strategic, so it's decarbonization, but not only also adaptation of the business strategy, of the business plan. And when we arrive at that level of strategy and review, repositioning of the business, we don't speak about ESG anymore. That's purely business. But where I would be really proud of I'm very proud of to see those strategy evolving based on those adaptation plans. Other than that, so climate, I would say it's maybe something that is very visual and that you can see on the markets. Other than that, every year we do a open research, which is for us a good. It means to put together public authorities, academicians, for assets which are sometimes not the best player but need to learn from the others. They listen to their peers more than they listen to me. So so we have a topic which is cross-sector every year. 4 years through digitalization, those kind of questions. 3 years ago was about climate impact, so everything related to decarbonization. That's when those plans came up. And 2 years ago about social license to operate, so how you work with your stakeholders. And we saw some of those discussion. The view we had was very defensive, was how you make sure that you don't have issues coming from citizens and coming from external groups on your asset when you're developing. And we find out that it was not so much a question of risk. We didn't face much of those issues, even if now we have rejected some project based on this consideration where we didn't want to face those kind of issues and we're not comfortable with it, but more about opportunities. So we had some example of assets leading the way in terms of long-term partnership with public authorities, with local I would say, yeah, mostly with public authorities and with the territorial authorities to develop solutions beyond their own business plan to improve their territorial footprint. And that's, I mean, things that it's not that we were discovering, but that was something that was never put in light, I would say. That was extremely positive and I think rewarding for everyone. I remember we did a special event for optic fiber asset in the north of France, and everybody was extremely proud to see. We did some videos in the street with an external service, and they were asking what did the optic fiber bring to your day-to-day life, and you have some small shops saying that if they didn't have this possibility, they couldn't stay in this region because it was not connected before. As I remember a lady in the market saying that she had a son in Canada, and thanks to the connection, she could have a day-to-day conversation with her son. It was really touching because it's really, once again, the idea is to show that it's impacting people in the day-to-day. Sorry, and yeah, and I think everybody was very interested and proud to be there and to show these results, this impact in the day-to-day of the citizen, the industry, the local industry, and yeah, and showing also the partnership with the public authority when they had to hire a lot of people in a really short period of time, how they did work and discuss with all the little municipalities and finding people who didn't work in the optic fiber before but couldn't find a job and get all the training and were then engaged in the company on the long term and find a new position. There was, yeah, once again, it's a very on the ground impact that you have to also to show, because it's not only numbers, it's how it touch people and a very large number of people at the end of the day.
Absolutely. So you can tell how passionate you are about it, Gwen, and clearly you very much enjoy your work. What are some of your influences, Glenn? What do you read? What do you watch? What do you listen to? You would recommend that others check out?
So, I mean, I'm really eclectic in my reading and my listening. I would say what I enjoy the most is a cultural exchange, geopolitical exchange, and in a broader ways to travel around. So it's not very climate friendly to say that, but I do, and you don't need to go too far away. And saying that coming from Asia, but I do really enjoy today to be here in Europe and be able to go to the different part of Europe and enjoying this cultural exchange. You don't need to go that far, and learn from each other. I think that's. I can't give you the name of. Oh yeah, maybe the name of one book I did really enjoy. I think I've been marketing this book more than my own research. It's one book I would recommend. It's the book written by Minouche Shafik, and the name is What We Owe to Each Other. I found it extremely interesting. It was during the time of her research on social license to operate. She has been participating at the research at one point, and and we had a quote from her in the report. But so I did read a book by curiosity, and I found it extremely impactful and interesting. So I will recommend this one if I have to recommend one.
Excellent. Thank you for that. And if anybody wishes to reach out to you post this podcast, how best do they get in touch, please?
Oh, please don't hesitate to email me. I will let you my detail with pleasure.
Excellent. Excellent. We'll put that all in the show notes. So, Gwen, thank you very much for joining us, giving us further insight into the infrastructure ESG world, the differences between Europe and the US, and lots of other actions for private equity professionals and portfolio executives to learn from. So, thank you very much for joining us.
You're welcome. Thank you for having me.
And as always, thank you very much for everyone who's listening today. Should you ever need support with private equity professionals or portfolio executive hiring across Europe and North America, please do reach out to us at Raw Selection. If you've not already done so, please do subscribe to the podcast and you'll be notified of the next one, which comes out every single week. But till the next time, keep smashing it, and thank you very much for listening.